In this video, I will tell you that the world is imperceptibly moving into a new financial era, in which Nvidia Bitcoins will become a new foundation. There are plenty of hints about this, but most people miss them or do not notice them, which means they will lose. But not you, because you've seen this video, which means you'll be ready. Let's start with the latest news. So, friends, breaking news. A joint statement between the US and China has just been published. It is actually a 3-month trade truce between the two countries. The United States and China have agreed to significantly reduce tariffs since May 14th. The United States will temporarily reduce them from 145% to 30%, and China from 125% to 10%. But this is not a complete deal, but just a pause for the start of real negotiations, which will have to reduce the trade deficit between the countries in the amount of $300 billion. And there is no need to have illusions, both sides need a deal, since ships loaded with Chinese goods are literally waiting in ports, instead of unloading in the United States. Well, the Chinese, having built an economy on exports, actually temporarily lost the largest importer in the face of the United States, which also threatens to be a big disaster for China. Against the background of the trade truce, pre-market has already started to grow from 3 to 15%. Tesla, for example, has grown by 7%, and some stocks show an increase of 10 to 15%. And look at the gap with which the Tesla pre-market opened. This is very encouraging for investors, because when the trading session opens, everything should turn green. And even oil began to rise after a prolonged decline that lasted from January 2025 year. This means that economic expectations have improved, and this agreement is perceived by investors as a significant step towards stabilizing trade relations between the two largest economies in the world, which in turn increases optimism in the markets. And the Americans and the Chinese themselves say that stable, mutually beneficial economic trade relations are now important to them. Now, it seems clear why Trump called on everyone to buy shares 4 days ago, because he knew that this deal would take place, or rather a prelude to it. I would never have thought that the US president would start giving signals, but nevertheless, he does it right when the market finds its bottom. Thanks to these events, the mood in the Bitcoin market is beginning to change. The current average value of the Fear and Greed Index is growing, which indicates the optimism of Bitcoin investors. But the index is still far from the overheat zone. Look, when this purple line, which is a 90-day moving average, reaches peak values, that's when it's worth thinking about sales. The peak values are from 75 to 100%. When it drops to 25% or lower, it means that there are extreme fears in the market. Usually it coincides with historical points of purchases and the psychological bottom of the market. At the moment, we are in the range of 41 to 53%. It's a little greed, but it's just beginning. What is interesting for me personally, the last time the indicator reached the overheated zone of about 80%, the price of Bitcoin was $109,500. Now this indicator has cooled down significantly, but the price of Bitcoin remains above $100,000. This means that the market is no longer overheated, even despite the supposedly high price of Bitcoin. In other words, today $100,000 for Bitcoin. This is already perceived as cheap, although 2 months ago it was considered expensive. At the same time, the psychology of the crowd is still in the phase of disbelief, that is, in disbelief. People have recently been in the most severe negativity, and still do not believe that there is growth on all these negative headlines. Usually, this phase of disbelief turns into a phase of panic buying, and such panic buying usually occurs at explosive peaks that indicate the peaks of the cycle. About a week ago, we talked about it in this video. It seems that we are right in the final phase of this cycle, which is called the curse of winners. This is if we talk about Bitcoin. If we talk about the stock market, we are also seeing an increase in optimism here. On the 7th of May, only 29.4% of investors expected that the American stock market would grow 6 months later, and today this number has grown to 37.5%. Although, to be honest, this is still not enough for euphoria in the market. And bearish sentiment still remains high, as can be seen on this chart, although we have fallen a little from the previous peak here. We had a slight drop of about 9 points. I also noticed that when this chart is at its peaks, you can already buy, and when it is at its bottom, you can think about exiting the market. After all, at the bottom, investor sentiment becomes euphoric. I mean at the bottom of this chart, not at the bottom of the market, of course. But what other motives do the bears have, besides the US-China trade war? Well, for example, inflation expectations, still high interest rates, which especially hinder small companies, or, for example, the risks associated with artificial intelligence. The bears are still hoping that the bubble and is about to burst. I really still think that from now until the end of the year, artificial intelligence and Bitcoin will be the main topics for investment on Wall Street, especially since we see good news on chips for artificial intelligence. Chip sales are growing, and Chinese companies, by the way, plan to purchase these chips for another $7 billion next year, and from NVIDIA. This means that there is demand, it is growing, and the AI industry is still promising. Also, Wall Street used to try to avoid Bitcoin, but today this has already changed. Clients of BlackRock and MicroStrategy bought 53,600 Bitcoins in April. We have seen a very unusual drop in the US dollar against the Taiwanese dollar, for a currency that usually fluctuates by several tenths of a percent daily. This is literally a historic leap that happens once in a generation. Why did this happen? This is the result of the forced actions of major players in Asia, who are hedging against the US dollar. This graph is very interesting, and few people noticed it. He highlights this situation. It displays the difference between the number of rising and falling stocks per day. This is also called the width of the market. The green arcs indicate the accumulation phases, and the arrows indicate the subsequent growth after accumulation. The gray horizontal lines are the previous resistance levels, which then become support lines. What is indicated by the fact that this chart has now reached a historic peak, that this growth is supported by many stocks, not just a few giants. So we can say that this is not a bubble, but a completely stable movement. What happened to the markets in the past times when the width reached a new historical peak? A year after that, the average yield was 14 as much as 0.21%. And note that in this case, out of 8 cases, only one was negative. The last such signal was in March 2024 here, and the most recent one on May 12, 2025. I also like the way Subu Trade describes it. He writes that reaching historical peaks is not always a bearish sign. This rule doesn't work for this graph. Now we see that large macro funds, which are called systematics macro strategies, and which trade on the basis of macroeconomic data and algorithms, have begun to actively invest in the markets again. As sentiment grows, this will continue. The algorithms decided that it was time to buy. And this can be a strong boost because these funds have huge money. In addition to macro funds, the retail investor, as you can see down here, is a strong buyer now. But smart money, those funds that are called discretionary macro funds, on the contrary sell. And we see it here and here. Also, share repurchases are simply gigantic now, and naturally they support the market because they create purchasing pressure on stocks. Deutsche Bank notes that the company's strong reporting has led to a surge in buybacks. So the companies are not depressed. The bank adds that companies usually do not buy back their shares in the same volumes if they are going to lay off employees. And they are going to dismiss employees for only one reason, which means that they are not sure that they will be able to survive the coming crisis. Now we do not observe this, which means that these companies do not expect a crisis. According to Deutsche Bank, the 3-month total volume of announced repurchases of shares of S&P 500 has just reached a record $192 billion and continues to grow. This exceeds the previous maximum of 2022 year at $160 billion. So this is a signal that the business feels confident. If these rates continue, then the 2025 year may become a record in terms of share buybacks. For comparison, this is very interesting. During COVID, share buybacks almost stopped, and this is evident from this failure here. And you can see it even better on this graph. In the 2020 year, when there was a coronavirus pandemic, we saw a huge drawdown of repurchases. Why was this happening then? Because companies were worried about the future, worried about the economy, worried about consumers, and therefore, they did not spend money on buying back their own shares. Now, as we see, these buybacks are much, much bigger, and we need to take into account that the 25th year is just beginning. The first quarter has just ended, and therefore we can set a record for share repurchases this year. Disney confirms this. It's a great example. The shares rose by 10% after the report. The company gave an optimistic forecast, and this directly says that everything is in a bundle in the economy. Elevator, another company, a service business, also sees no reason to worry. He does not see any recession. Palantir, a company associated with software and, more recently, with artificial intelligence, stated, "We are at the center of a tectonic shift in the implementation of our software, especially in the United States, where revenue grew by 55% over the year." The company also announced a new operating system for our artificial intelligence. Hyperscales continues to invest in artificial intelligence, ignoring tariffs and recession fears that worry others, especially those who follow the headlines of articles and news. And to understand the scale, the Magnificent Seven of Apple, Microsoft, Google, Amazon, Meta, Tesla, and Nvidia account for almost a quarter of the entire expected profit of S&P 500. This graph shows it clearly. And if we were to remove these 7 companies from the index, the rest of the market would almost not have grown since the beginning of the year. But now all of these companies, of course, have gone through a recent correction. Their shares have declined in price, and investors have become more cautious. They are no longer willing to overpay for future profits, and this is called multiplier compression when the stock price falls, even if the business continues to earn. We recently talked about the fact that the shares of the Magnificent Seven lingered below their 200-day moving average. But now we see that they broke through higher, and with a significant gap, which, most likely, we will close later. Why did this happen? Because the market was optimistic about the news about the tariff pause between China and the United States, but is this breakthrough true? Which will lead to continued growth, or fake, which will lead to a return below the 200-day average, which will lead us to a further fall down? This question can be answered by the company Nvidia. And let's get right to it. This video is the main character of both the revolution and, in fact, the symbol of the entire current rally in the market. Most of the growth of the S&P 500 falls on it. The company's earnings report will be released in 2 weeks on the 28th of May, 2025 year. And it can be a turning point that will determine the future movement of the entire Magnificent Seven. Will the growth continue, or will we go back below this 200-day moving average? Here we see a white graph of the price of Nvidia and yellow forecasts of its income. Why is this important? Because it was with the growth of Nvidia shares, from the start of the hype around artificial intelligence, that the market began its powerful rise. S&P 500 reached historical peaks thanks to Nvidia. But if the Nvidia report on the 28th of May here turns out to be strong, it can become fuel for the continuation of this growth, especially considering that the company still has a shortage of capacity and the demand for chips remains prohibitive, as we have already talked about. So whether we like it or not, the next 2 weeks are just waiting for a video, because it is on this day, the 28th of May, that it will be decided whether the AI sector will continue to dominate or the market will switch to other topics. For example, consumer tariffs or geopolitics. Therefore, it seems to me that the market will now wait for the 28th of May and will be based on this report. Now you know the answer to the question of what will happen to the markets, including Bitcoin, in the immediate future. Will he enter the final phase early immediately, or will he do it through the final sale? It all depends on Nvidia. Why do I still believe in this final phase of the bull run? Yesterday, we talked about 4-year cycles, and we are still following them. But Google trends inspire me even more in quotes. In 2021 year, right here, Bitcoin reached its peak, just like its popularity in Google queries. And where are we now? We are at the very bottom of Bitcoin's popularity in Google. Well, there is no such thing on the explosive peaks of the price. Retail is always massively Googling Bitcoin, closer to the peak of the cycle. It's not there now. Let's take a look for all the time. Here we are seeing another surge in the popularity of Bitcoin that has occurred, which occurred in December 2000 of the 17th, January 2000 of the 18th. What happened to Bitcoin then? Here is December 2000 of the 17th. And here is January 2000 of the 18th. We have reached a peak. Right here. I can't imagine a world where Bitcoin would peak when it's so unpopular on Google. The probability of this, as for me, is extremely small. Next. Many are now panicking, saying that the US economy is weakening. The first quarter showed negative data. Everything is bad. GDP is falling, but let's figure out what is really happening. Fed Chairman Jerome Powell repeated one key thing 3 times at his last press conference, and this is private domestic final purchases. This is a very important indicator because it shows how domestic demand feels in the economy without the influence of foreign trade or government spending. And if we are already talking about GDP, here is the ratio of money supply M to US GDP. And we see that it is returning to the norms that existed even before the coronavirus pandemic. During and after the coronavirus, we see abnormality on this graph, and now normalization. This means normalization of monetary conditions. And this, oddly enough, is favorable for long-term investments since the risk of overheating is reduced. In addition, note that this chart starts to turn up a little bit. This may be the first signal of a reversal of the monetary policy of the US Federal Reserve. The upward bending of this chart indicates the expectation of a reduction in rates, financial stimulation of the economy in an already open form, and easing of monetary policy. This is a very bullish long-term signal for risky assets as well. Now pay attention. Many people get confused and talk about tariffs. They scare that this is supposedly the worst situation since the beginning of the 1900s, and I myself compared the tariff war of 2025 with the tariff wars in the last century and the century before that, 1830s, I think, and 1930s. And I realized that I made a mistake when I started comparing it. It was incorrect. But why was it incorrect? Because in the 1900s, the USA was a commodity economy. People bought mostly physical things. Remember, on the 7th of March, Trump said that he didn't care about the market. And now his rhetoric has changed. I think it's precisely for the reason that he realized this vulnerability and now calls for buying shares. And now a real indicator that is worth watching if you are afraid of a recession. These are weekly applications for unemployment benefits. This is the leading indicator. If the economy is about to start falling, this indicator will take off first. But so far, as we can see, everything is basically stable here. White graph. This is an index of business activity in the service sector. This, as we found out, is the largest part of the US economy. And the orange line is the initial applications for unemployment benefits. And there are 2 important points here. Applications. This is a live indicator. It shows the situation in real time. If layoffs start, it grows. So far, we don't see any growth. So far, there are no mass layoffs in the service sector either. 0 at all. So when you hear headlines like layoffs in large companies, look at the real data. If people do not go for benefits, it means they are not fired. This is a simple but powerful indicator. And as long as he doesn't sound the alarm, everything is fine. And now, one more thing. The PMI Business Activity Index in the service sector is now lower than during past recessions. And here's the paradox. There are local recessions. In commercial real estate there is, in housing construction there is. But are there recessions in the services that make up the core of the US economy? No. If it were the 1900s now, when services were not the main part of the US economy, we would already be waiting for a giant full-scale recession comparable to the Depression. But things have changed since then. Therefore, unless something drastic happens, there will be no full-fledged recession due to tariffs. There may be some local ones. And now about the money. Barclays Citigroup says investors are willing to invest in risky debt. Investors have a huge amount of free money. For example, only in money market funds, it is about $7 trillion. People keep them there at 4% of income. But a lot of money is just gathering dust in bank accounts and does not bring anything at all. People don't want their money just lying around, so they are looking for somewhere to invest. Because of this, more and more investors are going into risky assets, sometimes even borrowing money, using leverage to earn more. So far, they are looking for profitability in risky debt, but perhaps in the future, they will look for even greater profitability in risky assets like Bitcoin and cryptocurrencies. And this is the chart of the Taiwanese dollar firm 1984. And here we see a huge two-day upward movement. The last time there were such massive movements was in 1998, only in the other direction, in the direction of falling. This happened because of the Asian financial crisis. They had problems fixing the exchange rate, their currencies were under pressure. And therefore Asian countries then began to accumulate what was considered gold at that time. These are dollar reserves. They began to hedge against future crises with the help of the dollar. Yes, there was a time when the dollar was a means of avoiding risks. And now 27 years have passed since then, and this is what is now happening with the dollar charts against the currencies of China, Japan, Korea, Taiwan, Singapore, Thailand, Malaysia, and the Philippines. They all convey the same message. There is a reversal of what began in 1998 with Asian currencies. That's why the Taiwanese dollar has strengthened so sharply. What provoked this from Taiwan? Taiwanese insurers faced problems amid the strengthening of the currency. This has become very, very significant and large-scale because Asia has accumulated a huge amount of dollars and made major purchases over all these years since 1998. This leads us to a new threat that is emerging in Asia. The dollar is facing the threat of $2.5 trillion in sales from Asia. Stephen Lee of Morgan Stanley says that Asian countries may start selling off their huge dollar reserves, which could cause an avalanche of sales of $2.5 trillion and create a sharp risk of a fall in the dollar. And it really can happen. I want to say right away, despite the fact that a negative mood prevails against the dollar now, I don't think it will collapse. It is possible to weaken, but the weakening of the dollar. This is good for Bitcoin. This is the Asian dollar index. This is not a real currency, but simply a conditional index that is used to track the exchange rate of Asian countries against the US dollar. We see that this chart found its bottom somewhere in January 2025 and has been growing ever since. And maybe it's a long-term trend like here, or here, or here. Most likely, this chart will continue to grow. If it continues to grow, it will affect this chart. This chart measures the weighted average strength of the US dollar against the currencies of other countries, taking into account trade flows between the US and these countries. And it looks like it has just reached its peak approximately like here in 2002. Note that it began to grow strongly after the gold standard was abolished in 1971 year. But don't expect a collapse in a straight line down, it won't happen because it never happens. The reversal of such global trends, which have been divided literally for decades, does not happen abruptly, it happens gradually. In waves, as, for example here. And pay special attention to the Chinese yuan in the near future. Most likely, China will soon either let the yuan float more freely, or revise its exchange rate, possibly to the level of 6.5 per dollar. This will be a trigger that will accelerate the weakening of the dollar, and in the coming years, the fall of the dollar may become one of the key topics in the global economy. This will affect absolutely everything, from raw materials and trading to stock markets, currencies, cryptocurrencies, and Bitcoin. Bitcoin, by the way, will benefit from this. Ken Rogoff has released a new book. It's called Our Currency, Your Problem. It's about the crisis of confidence in the dollar. His arguments are more balanced than those of Ray Dalio, who has been promoting the same thesis for many years. Horns has a more objective view. Here's what he says. When a country loses its status as the world's reserve currency, its interest rates begin to rise. Previously, the US had a privilege. The rates were lower than they should have been under normal conditions, and the dollar was gold. Asian countries viewed the dollar as protection from the next crisis, and every time they received dollars, they bought American bonds. This kept bond yields lower than expected. Do you understand the logic, I hope? I told how it affected the global financial crisis in previous videos. Any junk mortgage securities could be sold to someone, because there was endless demand from Asia. This, by the way, was one of the causes of the financial crisis. All these factors allowed the United States to have huge budget deficits and not worry about printing money at all. But if the world starts abandoning the dollar due to geopolitics, sanctions, trade restrictions, tariffs, the demand for US bonds may fall, and we are already seeing this. Long-term rates are starting to rise regardless of the actions of the US Federal Reserve. It's a signal. For example, in September, the Fed lowered the rate, and long-term rates rose. 10-year bond yields were 3% and 6% when the US Federal Reserve cut the rate by 50 basis points in September. And now we are at the level of 4 to 4% on 10-year yields. For example, now the US Federal Reserve is buying bonds at auctions, but long-term rates are still rising. This may be an early sign that the dollar's privilege is starting to erode, and this is the most important story in the market. The most important thing, I think, in the whole world at the moment. Here we see the orange line. It shows the yield of 10-year bonds, and the white one. This is the nominal GDP of the United States. And what do we see? Since 1980s, the yield of 10-year-olds has always been higher than nominal GDP, by 100 to 150 basis points. But when the crisis began in Asia in 1998 here, countries began to buy dollars and accumulate dollar reserves. Because of this, the yield on 10-year bonds fell below nominal GDP and has remained below this nominal GDP ever since. But this situation should change soon. As we see here, the 10-year yield is about to cross nominal GDP upwards. It is very important that up. And this will be an important event. For the US dollar as a global reserve currency, this will be a turning point. This will have huge consequences for the American economy and the entire global market. And to be honest, this is not good for those assets that have performed well in the past. But it will be great for those assets that have not experienced it yet. But for Donald Trump, it seems to be a great signal. This may be a step towards the redistribution of wealth, which he clearly expects. He also noted the possible impact of Trump's tariffs on prices and argued that a stronger dollar could offset much of this price increase. In the classical economic model, a 10% tariff can lead to a strengthening of the dollar by 4%. This strengthening of the currency, in turn, will reduce the cost of imports, which will help mitigate the inflationary effects. This is exactly how Bisson explained why manufacturers will be able to absorb the price increase due to tariffs. But here's the problem. The dollar has not strengthened since then, but on the contrary, has weakened by more than 4%. Also, do not forget that the global debt is $100 trillion if we take into account only sovereign and corporate debt. And this is not only a problem of the United States of America, but the rates in the United States are a benchmark for the rest of the world. Everything is evaluated relative to American rates. And here is an important point: 40% of this debt will need to be repaid before 2027 year. Remember the stakes. This is the key factor. And I said that the Taiwanese dollar is like a canary in the mine, but it was not the first canary. The second one. This is the yield on 30-year Japanese bonds. It is growing, and this week, it has updated new peaks. So it's not just about the US. We have a whole bear market on bonds planned here. Remember that 30-year US bonds have recently demonstrated the same historical movement as Japanese ones. These are all alarms that something bad is happening. But it's only been 5 years since the former head of the IMF, Olivier Blanchard, said that the national debt does not matter. You can print as much as you want, and it doesn't matter if the rates don't rise. Now there is no such privilege anymore. After all, the US Federal Reserve is still participating in bond auctions, just like in September 2019 and earlier, either with direct purchases or with reinvestment. True, these purchases are not yet displayed on the balance sheet of the US Federal Reserve. As you can see, it has not yet turned around and continues to fall due to the ongoing policy of quantitative tightening. But note, they have already greatly reduced their balance sheet. And my opinion remains unchanged: sooner or later, the government will have to intervene if bond yields continue to rise. This will be a direct financial stimulus from the US Federal Reserve, not a hidden one. This is what Luke Groman says. In fact, this is already an urgent need, a global financial and economic reset, which can be achieved, even without the Third World War, is necessary. And he even wrote down the points that would happen. The first is a strong devaluation of the US dollar. The second is a sharp increase in inflation in the United States, and the third, a significant increase in the competitiveness of the real economy in the United States. Fourth, a significant increase in nominal wages in the United States. Fifth, a strong decline in the real value of long-term US bonds and other dollar-denominated bonds. And the sixth, strong global economic growth. As a result, the United States will lose some of its financial influence, but there will be a redistribution of wealth. Debts will depreciate. This is very important, these $100 trillion, 40% of which need to be repaid. Before 2027 year, US domestic production will recover due to the cheap dollar. The global economy will get a new breath and Bitcoin can finally take off against the US dollar because it will weaken. And we need to understand that this is not a hypothetical scenario, we are already in it. We are in this cycle. Now people have started talking about it. The forecast for inflation in the US is getting worse, and the reason is the falling dollar. Experts from the Goldman Registry Office have revised their forecast, and now they expect that the inflation rate will reach 0.8%, although they recently predicted 3.5%. Why is this happening? Because when the dollar weakens, imported goods become more expensive. This directly accelerates inflation. A simple example is Brazil. As soon as their currency falls, prices within the country rise. What is happening in the USA now? This is important not only because of tariffs, they have already been taken into account in previous forecasts. Now this weakening of the dollar adds another inflationary blow. Moreover, this is evidenced not only by statistics, but also by the growing expectations of inflation among ordinary consumers. These are surveys from the University of Michigan, the Federal Reserve Bank of New York. Also among businesses, these are regional PME surveys. All indicators from orders to prices are going up. In other words, the market is already feeling inflationary pressure due to the weakening of the dollar. Now about government debt and the reasons why interest rates on bonds may continue to rise. There is not enough talk about this, but many are only now beginning to understand how difficult it is to cut government spending. Dogs can't really do anything about it, and Elon Musk admits it. Not the least role in this is played by the costs of social obligations, which are not just high, but also continue to grow rapidly. If we cannot reduce interest payments and reduce the budget deficit, and the deficit itself is only growing, then interest expenses will continue to grow. The only way to bring them down is if the US Federal Reserve starts cutting rates. But here's the problem. If the Fed does lower rates, it could backfire. Yields on bonds, especially long-term ones, will go up again. And we have already seen this. In September they lowered the rate, and long-term yields increased. That is why, in my opinion, the main thing to pay attention to now. This is the slope of the yield curve. This is the difference between the yield of 10-year and 2-year bonds. And we're seeing an increase in the slope of the curve right now, right here. An alarming signal is the reason for this growth, because it occurs due to an increase in the yield of long-term rates, which means that investors are demanding higher and higher yields simply for holding long-term US bonds. This indicates systemic risks and a loss of confidence in US debt obligations. There is another important topic. It concerns bonds around the world. As you remember, this year, the United States needs to pay off debts of $9 trillion, and therefore Trump needs low rates. But the stakes are rising. And that is why there is now more and more talk that the US can restructure its debt. They want either to delay payments on the bonds or to reduce the interest paid on them. While this is only being discussed, but an important point, Finance Minister Besson is already talking about it publicly. And it's not just words, it's a wake-up call. Peter Schiff says it borders on a bond default. And here a logical question arises. If America is really considering rewriting the terms of its debt, and what's the point of keeping it at all then? It is much more reasonable to switch to gold or Bitcoin as long as it can be done quietly. Because it's not about falling stocks, it's not about the stock market. It's about something much deeper. About the risks of the entire financial system. This is a systematic risk that could blow up Bitcoin and gold. Now let's see what kind of impact it is already having. In the USA, leading universities are massively withdrawing from investments in private capital. What does this mean? They stop investing in instruments such as venture funds and equity rules. The US was the main winner in the era of low rates thanks to venture capital funds, private capital, and shares of tech companies. Another problem. This is artificial intelligence. America has always been a leader in technology and programming, but now there is a real competitor AI. It's cheap, affordable, and very efficient code. And if you invest in those companies, businesses that are built on software, you will have to compete not only with people, but also with machines. And finding an alpha, that is, something that offers greater returns, will become more and more difficult. Next, an important point. The monthly number of companies that grow from 1 to 10 million revenues per year, and it is growing very fast and strongly. This is not how a crisis looks like, this is not how a recession looks like. This is the rapid growth of businesses right before your eyes. It's happening right now. It's just that not everyone notices it. Everyone notices only headlines like the recession will soon destroy everything, the apocalypse is coming, and all sorts of horror. No, in fact, there is development and growth at a pace that we have not seen yet. And that puts the whole old dinosaur world at risk. And now attention. Eric Schmidt, the former head of Google, said a simple but terrible thing. We don't have enough electricity to provide all this AI future. We're not ready. Infrastructure is lagging behind, and technology is flying ahead. And if you think AI is overrated now, you are deeply mistaken. In fact, he is undervalued. Things are developing much faster than most people realize. And finally, both agents for cryptocurrency and Bitcoin have a parallel system of trust instead of the US dollar trust, which is now falling. Therefore, guys, if you are still looking at the tariff schedules from the 1800 or the beginning of the 1900 and compare them with the 2025, stop and ask yourself, what am I even doing? Why do I need this information from the era when people rode horses? It's all in the past. Now Visa and MasterCard are implementing both agents, and there's no stopping it. Now an interesting point. In this video, he also talks about what the global reserve currency will be. It will be borderless, like cryptocurrencies. This is the essence of cryptocurrency. They are outside the state system, outside the state borders, and in fact, they have already won. He talks about global financial services without borders, about companies that operate around the world using stablecoins. For example, Breach, the company they bought. This graph shows their growth in payment volumes, and as we can see, it is exploding. Breach deals with cross-border payments. For example, people from Brazil can sell something to customers in the United States and get paid for it in cryptocurrency, in stablecoins instantly, with very low commissions, without the risks of a third counterparty. And all of this is happening right now. The venture fund Hey16 said that stablecoin. This is the first mass application of cryptocurrencies in the real world. Stablecoins will make sending money as easy as sending a message in a telegram or in another messenger. And when this standard takes root, according to them, Walmart, Chipotle, I do not know what it is, Chipotle, Kroger and other companies will be able to significantly reduce their costs. I think this applies not only to these three companies, but to all companies in the world in general. What happens in the end? While everyone is distracted by this news, Stripe launches stablecoins for more than 100 countries. Ramp will launch the stablecoin cards. It will be possible to pay for the stablecoin with cards. Superstate has launched shares on the blockchain. Robinhood is creating his own crypto platform. In May 2025, Coinbase, the largest US crypto exchange, announced the purchase of Deribit, the leading platform for trading Bitcoin Ethereum options, for $2 and $9 billion. This was the largest transaction in the history of the cryptocurrency industry. Meta returns to the game of stablecoins. By the way, it is noteworthy that there are practically no transactions and IPOs taking place in the traditional economy now, and we are seeing a boom in the crypto world. In addition, Meta is returning to the game of stablecoins. Ethereum has released a large-scale update. Bitcoin is again above $100,000, and the basis for digital capital is being created right now. The very capital that Michael Saylor is talking about. The very capital that will be at the heart of the new financial era. Internet capital is being born before our eyes, and this is no joke. This is a new format of the stock market. This is a new way of investing. If you want to invest in a new world, here it is, right before your eyes. We have entered the very 5-year period when everyone will have to deal with Bitcoin because there will be nothing more to invest in. This is not about mining, not about Coinbase. We are talking about an entire ecosystem that is growing despite tariffs, despite inflation, despite the recession, despite bear markets. Look, the hash rate of Bitcoin is at historical peaks and has never really fallen, except maybe 2021, when China banned Bitcoin mining. This means accepting Bitcoin. Here it is, growing. And we see this chart of corporate demand for Bitcoin, it becomes vertical. And the TEF's record 19 consecutive days of inflows. And this is happening against the background of general pessimism in the market. Institutions, banks, funds, large companies are increasingly entering the crypto. More and more institutional investors are buying Bitcoin. Institutional acceptance of cryptocurrencies is growing. There are many transactions on the issue of assets for the purchase of Bitcoin. Financial instruments based on cryptocurrency are being issued. Many so-called SPAC companies appear. These are dummy companies that are created in order to quickly either bring the crypto to the market or invest in an existing crypto. Michael Saylor also doesn't stop. He continues to issue bonds to buy even more Bitcoins. This shows that the market is gaining momentum again. Regulators are also connected. Banking supervision in the United States has already allowed the use and storage of Bitcoin in banks. This reversal of the regulator in the direction of Bitcoin. This is accelerating the adoption of cryptocurrencies. If you open Google Trends, almost no one is interested in Bitcoin. Here, at the peak of Bitcoin's popularity in Google Trends, the price of Bitcoin was $90,000. Here, at the peak of Bitcoin's popularity in Google Trends, the price of Bitcoin was $68,000. Now Bitcoin is at the bottom of popularity, and its price is $103,000. This is how it should be in a real bull market. Almost no one is interested in Bitcoin, but there is growth. While the majority has not realized anything yet, while the majority is still afraid and does not believe. But there are also difficulties, of course, where without them. The Senate did not approve the bill on the stablecoins. And guess who was against it? Democrats, of course. I just don't understand how they can sit and make decisions based on the desire to control everything, while this is already happening. Whether in the US or in other countries. It's too late to fight it. I know people who are already saving Bitcoin not for themselves, but for their children. Children already have Bitcoin reserves. What are you going to fight? Therefore, this causes discontent, because millions of people already benefit from cryptocurrencies. In the USA, about 42 million people are involved in the crypto. The law is needed. And this behavior of the Democrats looks like political suicide. Minus 42 million votes. Why are they doing this? Well, good luck to them in the fight against a huge part of their own population, which already benefits from the growth of Bitcoin. And, moreover, increasingly chooses Bitcoin, not gold. Look what a difference it already makes. New Hampshire has officially become the first state in the United States to lay the foundation for a strategic Bitcoin reserve. Morgan Stanley states that Bitcoin has sufficient market capitalization to become a reserve asset of the US government, and suggests a possible location of the US government in Bitcoin in the amount of $370 billion. Remember how recently Morgan Stanley didn't even mention Bitcoin. That's how things change. Vanik, if not the most authoritative, then one of the best in the field of cryptocurrencies, presented a proposal to create so-called bit bonds, a bit bond worth $110 billion, to help the US government acquire more Bitcoins and refinance part of the national debt at their expense. And finally, Merchants Cannes, this event before the Cannes Film Festival, will begin accepting Bitcoin cryptocurrency this summer.